Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 5th of July 2019, so welcome everyone. Welcome to this Friday's morning session where we're going to have a look at the markets, view the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute an investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also just a very quick mentioning of our JFD Bank YouTube channel, to which you can always subscribe to, and yep, in order not to miss any of our videos that we produce on a daily basis. So yeah, feel free to do that, and we will always be happy to see you in our webinars. Another also quick mentioning of our JFD research page, where you can also go in and have a look at different analysis that we do on a daily basis. Of course, we produce our daily market review, which is a more in-depth one, and I believe you can find that one useful as well. But for now, let's jump into the charts. Now, the first one I want to touch on here is the FTSE100. Now, FTSE yesterday kind of remained flat. It wasn't a very eventful day yesterday, so it even actually managed to close fractionally in the red. So that said, looking at this chart, you can see that it still trades above this upside support line taken from the low of the 3rd of June. In a way, what we're going to do here now is, given that it has distanced itself a little bit from this upside support line, in a way we could see this one maybe sliding a little bit back to the downside, correcting a little bit lower, and then if, let's say, this upside line continues to hold, then yep, we will aim for higher levels. That said, I mean, we do understand that this, let's say, for today, specifically for today, such a big move could be, well, too big, I would say, but unless something really strong happens that shakes the market a little bit here. So what you could do here is, for today, for example, keep an eye on this level right here, the 7,635 zone, marked by the high of the around the 24th of August 2018. So a nice good push above that could potentially lead the index towards slightly higher levels, and by slightly higher levels, we would need to find an area somewhere in between here, between the 7,635 and the 7,790, because that's our next good potential area of resistance here. But like I said, somewhere in between here, it could also get a hold up. So in a way, this little area right here, let me just capture that one. There we go. So the 7,707 zone, approximately there, was marked kind of by the intraday swing low here of the 8th of August, or actually, let me reiterate that was the low of the 8th of August, so 2018, of course. So that's why this could be that next little potential area of resistance near this 7,707 zone. And then we'll of course take it from there, see if it wants to continue pushing higher, then yep, that's good news for the bulls here. So in a way, if we draw some arrows here like this, then what we're going to do here is we're going to wait for a push above the 7,635 area, and then we will target this level that I've just mentioned, the 7,707. In terms of the downside, well, I mean, I do have a good level here at 7,555. The only thing is that it's quite, let's say, far from the area where the index closed yesterday. So in a way, if we see a drop below the 7,600 level, in a way you could potentially consider a possible move towards this little area of potential support near the 7,550, or slightly below that we do have that 7,530 zone, approximately around there, as you can see back here on the 23rd of April, and also on the 1st of July, it acted as a good area of resistance. So this time it could take the role of being a good area of support. So keep an eye on that one. But like I said, a drop below the 7,600 level in a way could open the path towards those slightly lower areas. But like I said, we will still remain somewhat positive, and as long as it continues to trade above this upside support line. Jumping into gold very quickly, this one after after reaching the 1,439 level again, you can see that it reversed back to the downside. I mean, the commodity managed to reach that level this week. Last week it did that the same. So in a way, of course, some could say that this is still looking positive, and because it's still trading above this upside support line taken from the low of the 30th of May. Of course, this is true. But the only thing is that we now, in order to kind of, let's say, consider higher levels, ideally would like to see that push above that 1439 zone before we could aim for higher levels. And let me just quickly jump into a daily chart on this one, guys. So in a way, of course, do not exclude the possibility here of seeing another slide lower, and of course do not exclude the possibility of seeing maybe something of a double top here. But again, this is not confirmed yet. I mean, in order to confirm a double top here, we would need to see a drop below the 1381 zone, 82, something like that, marked by the lows of the 1st of July. And then yep, we will aim for lower areas for now. As you can see, until it's kind of trading here above this upside line, we're going to continue targeting higher levels. The only thing is that still, in order to kind of, let's say, aim for higher levels, well, I mean, ideally we need to see that push above the 1439, and then yep, the next potential target for us could be around the 1451-52 zone, approximately around there. And just to show you what that level was here in the past, that was the high of the 4th of June. So I do apologize. Let me just slide this one a little bit here back into history. That was basically it was near the lows here of the 3rd of May, 3rd and the 7th, around the 7th of May 2013. Basically, these are the levels that we're hitting here in 2000, that we were hitting in 2013. So as you can see how far gold has managed to travel. So in a way, this is the area that we're going to be targeting. Of course, slightly above that, we do have the 1488 zone, which marks the high of the of May 2013. But for now, of course, let's keep it short and simple. Initially, like I said, if we see a push above the 1439, that's good news for the bulls, and we could then aim for the 1450 and then slightly above that. But again, looking at this chart currently, you can see that it's kind of now flirting with this 1412 zone, and if, let's say, today we see it slide below the 1412, in a way this could increase the chances for a retest of this upside support line. So that's why, guys, for now we're going to be very careful with this one. Of course, we do know that we have the NFP numbers coming out today, so also something to watch out for. Of course, if we take into consideration that the ADP number on Wednesday came out below expectations. Of course, it was above the previous low number, and but it came above the previous number but below the expectations. In a way, there is a chance that we might see something like that happening today with the non-farm payroll numbers. So, but again, always I kind of point out that we do not kind of correlate these too much. So let's see actually how the number comes out, what number comes out, and then we'll take it from there, and then we'll react to the market. So as I said, long story short, basically, for today, let's say keep an eye on this 1412 zone. A nice good drop below this in a way could increase the chances for a further slide towards this upside support line, which could be around the psychological 1400 level. In terms of the upside, a push above the 14 1439 zone. That's what we're looking here for in order to kind of consider higher levels. Such a move would confirm a forthcoming higher high, and yep, like I said, we will target the 1450 or above. DXY, I've talked about this one this whole week, and basically I keep telling you guys to keep a close eye on this little range that we've got DXY stuck in for now. You can see that this morning is already trying to push higher. The only thing is that before considering higher levels, we need to see that nice good push above that 96.88 zone, and ideally maybe just for that better confirmation, a push above this 200 EMA on the 4-hour chart, and then we will aim for this downside resistance line, for a test of this downside resistance line taken from the high of the 23rd of May. So in a way, for now, all eyes are on these two levels, on the 96.88 on the upside, and on the downside the 96.68 area, approximately around there, 68, 65. A drop below that could in a way increase the chances for DXY to slide a little bit lower here, maybe test this tentative kind of upside support line taken from the low of the 25th of June, and then we'll take it from there, see what he wants to do. If he wants to break that one, then yep, further declines could be possible, but if it holds again, then we could see a nice rebound and a push back up here. USDCAD, very quickly on this one. So the pair is, of course, it's in sliding mode. It is trading below this tentative downside resistance line as well. The rate currently remains below all of the EMAs. Of course, this could be seen as still as a negative. The only thing is that for today, right now, you can see that the the pair managed to push back above this pivot, which is somewhat of a good sign. The only thing is that in order for us, let's say, to aim for slightly higher levels, ideally we would like to see a push above the 1.3080 zone here, marked by the high of yesterday, and then yep, we would consider a possible move towards the highest point of this week, which is around the 1.3145 zone. So in a way, something like this we could consider. If we see a nice good push above the 1.3080, then yep, we'll aim for the highest point of this week. If that gets if that gets a break as well, then yep, we'll start considering a possible test of this downside resistance line. But for now, it's stuck here. In terms of the downside, here, if we see a drop below the yesterday's low near the 1.30 zone, approximately around there, then yep, the next potential target could be around the 1.3015. But if that fails to withhold, of course, the psychological 130 level could be tested, or even we could see a further slide lower towards the 1.2970 zone, approximately there. And let me just show you what that level was here in the past. Excuse me, guys. So the 1.2970 marks the low of the 24th of October 2018. So keep your eyes on that one, guys. So basically, long story short, for today, what you could do is to keep on monitoring this 1.3030 on the downside and the 1.3080 level on the upside. And the last pair for this session, quickly, euro dollar. So as you can see, it continues to balance above this 1.1275 level, but I've mentioned this pair in one of my previous videos, where I've talked about the potential break here. If we see that break below the 1.1275, then yep, it could in a way increase the possibility for this one to slide a little bit lower, but in a way the downside could be limited due to this upside support line taken from the low of the 30th of May. If this line holds, then we could see a nice rebound and let's say another push higher, but that's of course in the scenario if we see a further decline below the 1.1275. If this of course upside support line fails to hold, then yep, a drop below the 1.1240 could in a way trigger further selling activity here, and we could see this one sliding further down. But for now, of course, we're just gonna if we see that slide below the 1.1275, then yep, we'll consider a possible test of this upside support line. If let's say this doesn't drop below the 1.1275 and reverses to the upside for us, to get slightly more comfortable with higher levels. Ideally, we would like to see a nice good push above the 1.1312 zone, and then we will aim for the area around the 1.134850 zone, something like that. But like I said, initially, in order for us to get slightly more comfortable with higher levels, we need to see that nice good push above the 1.13 1.1312 zone. So keep your eyes on that one. Okay, guys, I do apologize for clearing my voice too much. I mean, my voice is a little bit going down, so I hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to see, if you want to join into my video later on today at my Trader's Tea Time, just before the, after, just a few, about 45 minutes after the release of the non-farm payroll. So that's going to be around the 13:15 GMT time. So well, actually, I do apologize. That's going to be yeah, okay, that is correct. So that's going to be 13:15 GMT time, guys. Just a few minutes before the, or actually 45 minutes after the release of the non-farm payroll. So there we go. Finally, managed to get it. Okay, so like I said, please join at my Trader's Tea Time at 13:15 GMT time. Yep, like I said, I hope you, I hope we can see how the market has reacted. Then we're going to cover some of these instruments as well, just to kind of see how they've performed, and we'll take it from there. I hope you have a wonderful trading day, guys, and I'll see you later. Bye bye.